In the past, I know you've talked about some of the benefits that people might have for short-term trading, and you've mentioned that if somebody is doing short-term trading because they enjoy it, then you can't put a value on that. That's a pastime that's absolutely valid. But as an investment strategy, surely that's not something that you would recommend the vast majority of people do, that they should take a more longer-term approach and possibly with some professional advice?
You know, as an asset management firm, within our own firm, whilst we might do the trading, we have the investing part as well. And it's the same with me as an individual. Whilst I might do the trading, I have the investment part. The investment part's a lot easier, of course, because you're looking at a longer time frame and a longer time horizon. And therefore, with that, you know, you diversify away the risk by making sure you don't have all your eggs in one basket, as the cliche goes. You diversify your risk by ensuring you have a longer time horizon. And that's the investment part. That makes it sound simple. The real difficulty is, okay, well, what is it you're going to put your money in to ensure that over that long period of time, it is going to keep rising? And even when there's falls, you're not worried. It has to be something of sufficient quality, or a basket of things of sufficient quality, that even if there are dips, and there are always dips in the markets, no matter how good you are, no matter how amazing you are, that you're not worried. Because you go, well, that's just part of the market noise. Doesn't worry me, doesn't panic me. There'll be ups and downs. And it also has to be of sufficient quality that when together as a basket of eggs, as I say, they don't all move lockstep either. And that's when you want an extra pair of eyes looking over it. You want, you know, the professional who's paid to do it.